Okay, ready?
Yeah, first we've got Justin and Liley from Positive Money.
Hello everybody. Thank you. Thanks for letting me come down today to give you a short talk, and I'm going to be talking about positive money. I was originally going to give a bit of an introduction into the history of money, but I think I'll forego most of that, to be honest. I'm sure some of you have already got a decent enough idea of how the history of money has worked. It's always been used in any sort of civilizations, going back to Babylonian Empire and then into the Roman Empire. Everybody, throughout history, they've needed to use money for three basic reasons. The three functions of money are, firstly, as a medium of exchange, secondly, as a store of value, and thirdly, as a unit of account. So that is the purpose of money in our economic system. If it doesn't fulfill those three functions, then something is not right. So I'm going to be talking a little bit today about what has been going wrong and some of the suggestions of ways to put it right. So how is money created? That is the first question. And because you're all from Zeitgeist, I assume you've watched the Zeitgeist movies and you know all about fractional reserve banking and all of that business. So I won't bore you by going into the details of that, but I'll just give you a quick anecdote, I suppose, of how that actually works. So it started out with goldsmiths. You would go into the goldsmith and they would give you some gold, and you would then go around and use that as money. And as it went on, people realised that getting your gold from the goldsmith and then carrying around a bag of gold wasn't actually that practical a way of doing it. So they started to use checks and paper notes. So the goldsmith would write it out for you, and you would have a piece of paper that would entitle the claimant of that piece of paper to a set amount of gold from the goldsmith. And this all worked fine and everything like that until the goldsmith started to get a little bit greedy. And then what they did basically was they were lending out more money than they had gold in their reserves. And when people were getting a little bit uncertain about what was happening, they would go back to the goldsmith, and if everybody went back to the goldsmith at the same time, then there would be big problems, because the goldsmith would not be able to meet the obligations of all the paper money that they had put into circulation. And we are in exactly the same position today, more or less. A much more technological version of it, but that is what is happening. Through the process of fractional reserve banking and deposit banking, banks create money out of nothing. So if you want a loan, you go to a bank and they will not go into their reserves and lend you money that savers have put into their accounts. They will actually type numbers into a computer screen. That money will be created and put into your current account as deposits. So when they're doing this, they're creating new money. If you want to go and get a loan for a house of 100,000, that is new money that is created into the system. It is not backed by any form of hard currency in any way. And this is a concern. When money is not backed by hard currency, it inevitably equals debt. Because if somebody has the money, somebody has that £100,000, somebody else will have to be in £100,000 worth of debt. That is how it works. It is a win-lose game. There is no other way out of it. People having money means other people in debt under the current system. And it has got really out of control at the moment. Did you know that only 3% of money in the system is backed by hard currency? The other 97% of it is fiat money, as it's called. Other people call it digital money, paper money. It is basically money that does not actually exist, other than on a computer screen or in your bank statements, anything like that. It is not backed by hard currency. And positive money, they've got three solutions to the debt crisis. The first one of them is taking the power to create money away from the banks and returning it to state control. Okay? People get a little bit concerned when we talk about the nationalisation of money and All of this because they think we can't trust the governments. The governments are going to overspend, they're going to create too much money, and this is going to lead to Zimbabwe-style inflation. So this needs to be controlled in some way or another. What Positive Money recommends is that the Monetary Policy Committee is responsible for the supply of money into the system. So they will not create any new money other than what is needed for it to function effectively. And they recommend, according to population increases and stuff like that, new money created would amount to about 3 to 4% per year of what we already have. And that would be enough to stop inflation, but keep the money in circulation. But they would have to be doing this by minting new coins, printing new notes, so that the money was backed by the hard currency. Okay? And any questions on that? Is that making sense to everybody at the moment? No? What part of you are you not quite grasping? Because I am concerned that I'm not explaining it as well as I could. This is my first time giving a presentation, so yeah, go ahead, Adam.
You say that banks can create money out of thin air.
Indeed.
But I don't think that's the case.
Really?
At the moment, what banks do is they borrow money from the money market, or they get money from depositors, and then they lend that money to other people.
Indeed.
If you read the local, if you read the financial press, Lloyds Bank, Halifax, and so on, they're increasing their rate of interest on mortgages.
Yep.
Why? Because the explanation they give is it's become more expensive for them to get money, funding from the from.
Absolutely.
So they're not creating money out of thin air.
No, you're quite right. And if I could just address that point, hopefully I'll clarify. Between the years 2000 and 2007, the banking system doubled the amount of money in the system. It went from I can't remember the exact figures off the top of my head, but something like it increased by 800 billion over those 7 years. Since the economic crisis of 2008, they've had to shrink that money supply. They've not been making as many loans. People have been paying back the debts. So when debts are paid, the money in the system shrinks. Is that making sense to you, Adam? I think that is sort of what you were picking up on.
Why do banks and building societies have to have money in the first place? Why do they ask for savings? Why do they ask for deposits?
Well, that goes back to the three.
If they all they can do is when somebody comes for a mortgage, they just put something on a screen or something. They don't need any savings. Why don't they just do it?
Well, it's the three functions of money. We need that money as a medium of exchange. You need money if you want to go to the shop, do your groceries. You need money to be able to do that.
No, it's okay. You're making a prime mistake there. You say banks can print money.
Yep.
Right? It's not banks who can print money, right? It's only the central bank
Yep.
who print money. Right? You need to make that distinction. Right? It's not the high street banks. They are not in a position to print money. The only institution that's in a position to print money is the central banks. Right?
I'm not sure if you know about how the central bank system works.
I am aware of the central bank system.
You know how all the high street banks, they have accounts with the central bank?
Yes, I am aware of that.
That is
I
how...
am aware how the money is circulated amongst the other banking institutions. Right? But it's the central bank that prints money, not the high street bank that prints money. Right?
They are creating that money.
See, when you say banks, what you're doing, you're confusing people. Right? You need to make it clear that the central bank print money, right? And it doesn't necessarily have to be backed up with what you drew down currency. Right? As long as it's backed up with in regards, well, yeah, it could be backed up with government bonds, but then government bonds would reflect the assets of UK PLC.
Yep.
Right? That's what then government bonds reflect. So
Absolutely.
They are backed up with, with assets.
Yes. Because we should say that money is not wealth in itself. Wealth is something that is different. Money is a claim to that wealth. Okay, that is a really important point that we should get across to people. Money is a utility. It's not a commodity. And what we have at the moment in our system is money has become a commodity. It has become so that people can trade in it. And this is where we get all the derivative markets, the swaps, people, borrowing against pension funds and things like that. Effectively, it gets really, really complicated. But I assure you, from everything that I have read, and it is on good authority, I may not be expressing it as well as I possibly could, but the high street banks, through their process of issuing deposits, are creating the money. That may go back to the central bank because they hold accounts with the central banks. All high street banks have to do this. They all have to level up with their balance sheets at the end of the day. And the central bank is in control of authorising all of this. But the central bank itself is not in the business of creating money, issuing loans. That happens from the high street banks. They are the people who issue mortgages, which I should say mortgage itself comes from the French for death grip. And I think that is effectively what we're talking about here. Did someone want to say something then? Sorry.
I was just laughing
At that little...
It sounded something like that.
So, sorry, I missed that. But yeah, mortgages, they are a grip of death. It is basically how much money that you can pay back before we die. It's debt in itself is a form of slavery. And as difficult as that may be for people to comprehend in our highly civilized technological society, when you're in debt, you are effectively owned by somebody else. Until you can pay that debt off, you are not a free man. And when we have a public debt, a national debt, we are all slaves. We are all indebted to the banking system itself, whether that is the high street banks or the central banks. It is all the banking system. The international banking system is what is wrong. And here in the UK, we have an opportunity to change it. And this is what positive money is about. They want to take back the right to create money from those commercial banks to the central bank, overseen by the Monetary Policy Committee. Okay? Now, what will happen is the commercial banks, high street banks, they will have to borrow from the central bank, which will be owned by the state. They can borrow it at a certain rate of interest, and they have to then loan it on to other people at a higher rate of interest. The interest that the high street banks pay back to the state is called seigniorage, and this is effectively an amount of money that we've been missing out on for a very long time, as long as we've been letting the banking system get out of control. And if we take back this right and we get this seigniorage money, that would amount to, I think it's between 20 billion a year and 50 billion, but I would probably go to the lesser figure of that. But 20 billion a year is a decent amount of money. We could do an awful lot with that. That could be used to bring down taxes, to increase public spending, and anything at all we wanted to do with it, because that would be our money. We could pay down the national debt with it, which we really, really need to do at the moment. Because the debt, there's different figures being bandied around, but the figure that positive money uses is 2.4 trillion of debt. That's 2.4 trillion. Can we even comprehend how much money trillions of pounds is? When they're talking about austerity and we see fuel costs going up, food prices, and they're talking about trillions of debt. And what have we actually done to get into this debt? Is it our fault? Is it local governments? Have they been spending too much money on improving public services? I don't think they have. Have we gone into too much debt? Yes, we have, because the high street banks for the last decade have made credit very easy and cheap to get. It is only since the economic crisis that credit has become very, very difficult to get hold of, hence the terminology, the credit crunch. So we're we're going through the bust at the moment. We've experienced the boom and the era of high growth, and now we're in recession. So what are we going to do about that? How are we going to fix those problems, get ourselves out of debt, and move on to a more sustainable economy? Has anybody got any ideas on how we could do that? Resource-based economy, exactly. The problem is, how do we get there? And I think personally that Positive Money has got some really good measures, proposals to work out how we can make the transition work. Positive Money themselves say they are not against competing currencies in any way. They're in favour of a resource-based economy. They're in favour of alternative currencies. This is something that people should be thinking about. The LET system has been used, and it can work in community-based operations if it's run effectively. And there are other innovations coming out at the moment. Positive Money is one. There's the lawful bank, the alternative monetary system. Don't know if anybody's seen any of the videos about that, but that is one alternative. So going back to the Positive Money, I've said we need to return the ability to create money back to the state. The second proposal that Positive Money talks about is full reserve banking. Now this is tied in with the first point, and it is the antidote to fractional reserve banking and the system of usury, which the commercial banks and the international bankers, the 1% effectively, they've used the process of usury to enrich themselves at our expense, and it isn't going to stop. The way that it works, the rich will always get richer, the poor will always get poorer. The money does not trickle down, as Milton Friedman led us to believe in the 1980s. It gravitates upwards. The money is attracted to existing capital, and that is always going to be the case until reforms are made to return money to public control, public ownership, and so that it can be used as a utility again. It needs to be the oil in a machine. It needs to be used like a wheel rather than the transportation of goods. It needs to be about the exchanging of goods and investment, development, all of these things that we need for progress. What we don't need is growth. And everything that we hear about in the economic system as it stands at the moment is about gross domestic product and the growth of the economy. This is totally unsustainable. It's got to be changed, and there are some groups around the world. One of them in Canada and America is the Steady State Revolution and the Post-Growth Institute, and they're talking about a more sustainable, progressive economy, and they advocate using the Genuine Progress Indicator, the GPI. This is a much better alternative to the GDP, and if governments and economists begin to use this, then we might actually find our system working a lot more effectively. So I did just lose my train of thought a little bit. I want to go back to the full reserve banking. What this will effectively mean is that commercial banks and investment banks will be kept totally separate. So all our wages and the money that we want to use on a day-to-day basis, that will be kept in a current account. The banks will be totally unable to touch that money. That money will be safe for us to use as and when we need it. The investment banks will still exist, but they will be separated from the current accounts. So you can have an investment account, and this will be the equivalent of a savings account. So if you want to go for high-risk investments, you might get a higher return interest rate on the money that you save. If you want to go for lower risk, then your money will be safe, but you might not get as high returns. The key point in doing this is to stop the bailout of banks, okay? The amount of money that we have been forced to use to bail out banks is so disproportionate to the government spending on education, health, all of that. The amount that we've used to bail out the banks is, I think it's over 100 billion, something like that.
100 billion.
100 billion, yeah.
Billion.
Billion. 100 billion. I think it's actually like 134 billion or something like that. But yeah, it's a lot of money. And why should we be responsible for paying that back? Why should governments be responsible and then pass that burden on to the taxpayer? That seems totally outrageous to me. And the reasons why we hear all about austerity measures and cuts all the time, it's because of this. Positive Money has the One Good Cut campaign, which means we won't need to make any austerity measures or cuts. We can just cut this subsidy to bankers, stop them from creating the money and earning the interest off of that money, including what they lend to the government. Because when the government lends money, we lend it from the banks. We tend not to print it ourselves. We lend it from the banks and we pay interest over to them. The interest repayments alone every year are absolutely killing this country, killing this economy. They're so unsustainable. We cannot keep it going. And something needs to be done sooner rather than later, because if it's not, the rich will not only have all of the money, they will have all the wealth, all of the resources, and we will be in a very difficult position. We might be able to live day to day, and there might be, community groups that are looking after each other, looking after our daily needs. But in terms of investing and progressing and, getting a better, more sustainable infrastructure and energy, all of this, the only way to do it is to sort out this debt problem, sort out this interest-based money, and find a better solution. So the final proposal that Positive Money has is transparency. So this basically means that banks will be forced to disclose who they are loaning money to. So at the moment, we don't know basically who HSBC or RBS, who do they lend their money to? Who do they invest their money in? If all banks were forced to disclose this information, we'd be in a much better position to choose where we bank, where we save our money. This is leading on to ethical economics. Because some people, they're not interested in ethics, they're not interested in saving the planet, anything like that. All they want is profit. And those people, they will still exist. Because in an open free market system, people need the freedom of choice to do whatever they want. But at the moment, we don't have that, because we don't have the freedom of information. If we did have that, and we knew that, for example, RBS was lending money to nuclear research facilities or companies involved in offshore fracking and looking for oil, and companies cutting down rainforests or exploiting land in Africa to satisfy our consumer needs. All of this, we would know, so we would be able to choose. And we'd be able to think about going for more ethical banks. And the banks would have the incentive to be more ethical and lend their money locally, so we could see how our savings was being used to good effect. And I think this would make a far more competitive system. As I said, it would be more ethical. And I think this is something that we need to seriously think about. There's a campaign at the moment called Bank the Bomb, and they're talking about this exact issue actually, and they've got a lot of information on where these banks do lend their money and invest in, and it does tend to be in unethical businesses, things that the average person on the street, all of us probably, would really strongly disagree with. So that is the final proposal that they have, is the transparency. So just to clarify, proposal number 1, return the right to create money back to the state. This is the democratization of money, if you like, and this is being supported in America at the moment. not by Ron Paul so much, but by Dennis Kucinich. Don't know if anyone's heard about him, but he's put forward a bill called the Need Bill, and I've got some information on that. If anyone wants to read afterwards, I'll happy to share that. So yeah, that is the first point, the democratisation of money. The second point is full reserve banking, and the third and final point is ethical economics and transparency in the system. So I think that's about all I want to cover there. I may not have made it as clear as I wanted to be honest, but hopefully I would have said enough to encourage people to go to the Positive Money website, check out their videos, their proposals, their articles. There's a lot of other groups involved in the Positive Money campaign and other campaigns. There's the New Economics Foundation, there's the Cobden Centre, there's Banks of the Future. There's absolutely loads of them. The Positive Money proposals are based on the work of James Robertson and Joseph Huber, who is, Joseph Huber is a German economist, and Germany and Switzerland have got their own movement at the moment called Monenative. Bit hard to say, but they're talking about exactly the same things that I've said about here. And yeah, hopefully they will get some momentum with their proposals, and as they go forward, people will come around to seeing the logic in them, and hopefully people will do the same with Positive Money, and not think of any of the fear that goes with it, and we're going to be giving over control or anything like that, because we've got to think that somebody has to be in control of the money supply. The Monetary Policy Committee at the moment, they advise on interest rates, so they set interest rates. Has anybody noticed how insignificant interest rates have become lately? They're so low, something like 0.25% or something, I think is the current interest rate, that this has very little meaning for all of us. It has been at that really low rate for, it seems like years now. So what we propose is, rather than the MPC setting the interest rates, we let interest rates float, but with some regulation to stop abuse of usury. But the MPC can regulate how much new money goes into that economy. Because if we have over issuance of credit, we get boom, and that is inevitably followed by bust. So that is why we must take that right back as a priority. It's been a public right in the past. In 1844, there was a act put forward by Lord Peel called the Bank Charter Act, and that made it illegal for commercial banks to mint coins or print money. But the difference has come with digital money and the onset of online banking, because they can get away with fractional reserve banking and money creation in ways that we can't fully appreciate, because it is in the system. It's digital, and it is hard for people to understand. When you're trying to talk about this sort of thing to an economist, they will inevitably convolute the situation and start talking about a lot of theory which inevitably goes over our heads. Positive Money is trying to simplify it and break it down to these three core points. But the website has got a really good blog. It's got lots and lots more articles, and if anyone would like more information from me, I've got a pile of PDFs at home on my computer that I'd be more than happy to email to all of you, and so you can see why I agree with Positive Money rather than taking my word for it, basically. And finally, we'll end on this note, I promise. On the 27th of March, the founder of Positive Money, Ben Dyson, is coming down to the Welsh Assembly to address a conference room of Assembly members who are interested in Positive Money. So I'd like to invite all of you to come down to Cardiff Bay on the 27th of March between 12 o'clock and 2 o'clock, so we can show support. If you want to support it, if you don't want to support it, come down, speak to people there, and get your side of your point across. And yeah, let's just get people talking about the issue, because it is in my opinion, it is the most fundamental issue holding us back at the moment. There's so much debt, we've got to find a way out of it, otherwise that debt will just get bigger and bigger. Debt is borrowing against the future. So if any of you have children or are thinking about having children in the future, we've got to think that we are, in part, responsible for the debt that we hold because we've not done anything to stop it. The banks are most responsible, the government's then for allowing them to do what they've done, and us for not holding the government to account. So I propose, with all the protest movements, resistant movements, Occupy, Zeitgeist, Emergence, all of these, we need to come together at some point and either support one initiative like Positive Money or look about developing other ones. So that is it. Thank you very much. I'll take a few questions now if anybody has any, and I will try and answer them the best that I can. Go ahead.
Yeah.
I won't mention the raising of capital because that's been mentioned, but actually high street banks buy money on the spot markets. That's how they raise capital and lend it out. So that's already been covered. So I'm going to labour that point. It seems to me that what you're proposing, and I know I've talked to you about this before.
You have, yeah.
The Occupy movement.
Indeed, yeah.
And it's the same thing that I mentioned to you, is that the point seems to be that you're recommending that the state takes control of the money supply. Well, the state does have control of the money supply right now. They print money and that's distributed, and that results in currency being